Be Wealthy and Smart, episode 1546.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about all the economic indicators out there, and some of them are looking a little mixed. We have some positive news, we have some concerning news about inflation. So I'll share with you all of the statistics we got and try to make some sense of it. So the good news is consumers kept spending in July despite worries about tariffs, and retail sales increased 0.5% for the month. Excluding auto-related items, sales rose 0.3%, and both were in line with Dow Jones estimates. Motor vehicle and parts sales jumped 1.6% on the month, and furniture and home furnishings receipts grew 1.4%. Miscellaneous retailers saw a drop of 1.7%, while building materials and home and garden centers fell 1%. On a year-over-year basis, though, sales increased 3.9%. So it looks like the consumer is still holding up, which, as we know, is 75% of the economy. So it's really important to see what the consumer is doing. When we look at import prices, they increased 0.4%, which were pushed higher by energy prices, and export prices were up 0.1%. We had consumer sentiment drop in August, as the survey of consumers posted a reading of 58.6, which was down 5% from July for the first decrease in 4 months, and that was below the Dow Jones consensus outlook for 62.5. On inflation, views at both the 1- and 5-year horizons rose 0.5 percentage point respectively to 4.9% and 3.9%. So prices have risen somewhat faster in recent months, but not by alarming levels. The Producer Price Index surged last month, which far outpaced economists' forecasts, and could show that tariffs are starting to drive up some prices. The PPI measures price changes before they reach consumers and suggests cost hikes are on the way for shoppers, according to economists. The Fed has its next meeting on September 17th about whether to hold or cut its benchmark interest rate. It's tasked with keeping inflation low while also promoting full employment, what's called its dual mandate. And because the CPI report came in cooler than expected, just a few days ago the Fed was seen to be more likely to cut rates next month. But with the latest PPI data maybe stronger than expected, that put that cut in doubt. Chris Larkin, Managing Director of Trading and Investing at E-Trade, said the PPI data suggests inflation isn't the non-story some people thought it was after Tuesday's CPI print. As far as the likelihood of a rate cut goes, the data doesn't slam the door on a September rate cut, but based on the market's initial reaction, the opening may be a little smaller than it was a couple of days ago. Yeah, so the market sold off a bit in worry about interest rates, and are interest rates going to be cut or not? But most traders are still pricing in at least one cut in September. Of course, the Fed is dependent on data, so we'll continue to monitor data to see what the inflation numbers and the unemployment data numbers tell us. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.